Good afternoon and happy Saturday, my fellow investors. Some of you may recall that I have a few hundred shares of Intel and 0 shares of AMD in my portfolio. People ask me, why do you have Intel? Is AMD not the better chip maker? Do they not have a better product at a better value? Are they not the better company with more growth ahead of them, etc., etc., etc.? So there's two different kinds of value proposition, okay? So if price is what you pay and value is what you get, what that means is you want to get basically a better deal for your money, and sometimes that means you have to pay a little bit more to get something better, okay? All right. So if you're at the store, what does that mean? And let's say I'm trying to pick a new CPU for a new gaming PC I'm building. It means I'm going to try to get the most processing power for every dollar I spend, right? And I mean, 20 years ago, when a lot of the current AMD bulls were in diapers, AMD had, that reputation delivering that for gamers. Now, if I'm at the grocery store and I'm trying to choose between, say Coke and Pepsi, well, Coke all the way, more taste for the dollar, even if the Coke is a little bit more expensive. Now, the question you have to ask, though, is how much better, right? So in the case of Coke here, if my choices are Coke and Pepsi, and I like Coke more, right? If each one is $1 a can, well, I'll get the Coke all day long because I think that $1 can of Coke has a lot more taste in it than the $1 can of Pepsi. All right. Now, what if the Coke's $1.10 and the Pepsi's still $1? I'm probably still going with the Coke. What if the Coke is $10 and the Pepsi is $1? Well, then all of a sudden, I'm asking myself, is Coke 10 times better than Pepsi? I might say yes to that, but for illustration purposes, at that point, I'm probably considering switching to Pepsi, okay? So when it comes to buying a business, you're buying the earnings, right? You're buying the cash, this future stream of cash flow that it's going to produce. And so at current levels, right, the earnings it currently produces, you're looking at $15 worth of Intel stock buys you $1 of earnings, okay? And you also get a piece of the balance sheet, right? And so, you get a proportional piece of, $101 billion of stockholders' equity. That's roughly, at the current market cap, a 20% premium you're paying for those assets, but you're buying a combination of earnings and assets, okay? You own your share of stock is just this little tiny piece of the business. You're basically this miniature partner in the business, and your share just represents an ownership interest in it. Okay. Now back to the Coke and Pepsi example. If we say, okay, AMD is it's better, right? I like it more. I'd rather have that business because I think the future is better. The growth is better. They're going to be the market leader. Okay. Are they going to be twice as good as Intel? Are they going to be 3 times as good? 10 times as good? And this is where I think a lot of people jump the shark buying AMD instead. Because $1 of earnings in AMD stock will run you a hefty $116 at the current levels, okay? So that same dollar, that's what you're buying, that's the same, right? The growth levels on that dollar, like how much that dollar turns into over time, may be different. Maybe AMD is going to grow it at 10 or 20% a year. Maybe Intel's only going to grow it at 5% a year, right? But the current price for that $1 of earnings with AMD is 116x. That's more than 7 times the multiple. You're taking if you took Intel's multiple and then multiplied it by 7, that's AMD's multiple. You're basically saying AMD is going to be better in the future at some point, hopefully not too long because I'd like to get a return before I'm dead. 7 times better than Intel on that basis, on the basis of the stream of earnings. Now, when it comes to the balance sheet on AMD, it's 54, just under 55 billion in shareholders' equity. Granted, that is growing at a nice clip. Intel's is growing also, but more slowly. Okay, they're trading their market cap roughly 3 times, which is a plus 200% premium. Okay, if Intel's a plus 20% and this is a plus 200%, that implies that these assets, even though, like, you know, dollar for dollar, are 10 times better to have than Intel's assets. 10 times better. It's an order of magnitude. Where the market is literally implying that AMD is an order of magnitude better than Intel. Well, but hey, it's the growth. All right, enough with the growth, okay? Because Intel may be growing a little more slowly, but they're buying back shares. Now, chips overall is going to be growing. So there's room enough for everybody to, you know, potentially grow that's big in this space. Now, it could be that AMD gains market share, but Intel has been buying back shares, meaning, you know, every share you bought years and years ago back here represents a much larger piece of the company here. And if they continue to do that, existing shareholders will continue to see their stake, their piece of that future earnings, get larger as the share count decreases over time. AMD has done the exact opposite to their shareholders. All right, back here, every 100 shares that you bought represents about the same equity. They basically diluted you in half. So they represent roughly the same. If they just doubled all their numbers over the period of time from 2009 to 2023, you would have seen no benefit as a shareholder if you had bought in 2009. You would only start to benefit after the point of doubling. Okay? Because they diluted you so much in that period of time. So, yeah, that in a nutshell is why I have Intel in my portfolio and not AMD. Because I think you can pay too much for something, even if it's better than another thing. Okay? And that's really all I have to say about that. Give me all your likes and comments and subscribes. I do this all the time, and I really enjoy it. Interacting with you in the comments is basically my favorite part of having this channel. Take it easy, and peace.